Hello and welcome to the European Banking Authority and our short introduction to our funding plan report and its associated data. The job of the European Banking Authority is to set the rules for all banks across the EU. But in addition, we assess risks across the EU banking sector. To that end, we collect data for supervisors and we use that data to analyse sectoral risks. For example, last year we identified high levels of non-performing loans as a potential problem. We also run stress tests where we assess how strong EU banks are to withstand a hypothetical economic downturn. And we try to make this data as easily available as possible to better inform market participants. This video introduces one of our thematic reports on funding plans. So what are funding plans? Well, funding plans offer a window into what banks expect to happen to their lending and borrowing. So we ask banks what they expect to happen up until 2019. You might see this as a barometer of potential economic activity. And when we ask banks what they will do, we ask if they will increase lending, and if so, how will they fund that lending? For example, it could be simple, from shares, equity, or from ordinary deposits in banks. Or it could be more complex, by borrowing in the market at different durations, e.g. 1 month, 3 months, 5 years, or borrowing from central banks, which has been a feature of the crisis. And what does the report tell us? Well, on average, it's good news. Banks expect lending to grow by 4% across the EU. Now, to fund this overall growth in lending, 3 features stand out. The first is that ordinary deposits are expected to grow by 9.4%. The second is that there should be a modest drop in reliance on that official sector central bank funding up to 2019. And thirdly is an expected increase in market-based funding, which may reflect both increased confidence, but also a requirement to ensure that banks have funds for both good times and bad, including orderly resolution. But this average hides many differences between countries. And so Ali will talk us through how our web-based tool can help you create a dataset that meets your requirements and answers your questions.
Indeed, there are marked differences between countries and between banks. That's why we have created tools to help you personalize the data and address the questions you are most interested in. Let's ask ourselves some basic questions and demonstrate how the tool can address them. For example, how does the average funding structure differ from one country to another? Let's say you want to know the level of household deposits in Spain across time and in relation to other countries. Just select client deposits and then the country you want to investigate. This shows you that the household deposits in Spain is over 46% of total funding in 2016, and it is expected to grow to 48% in 2019. We can then compare this to another country, say Sweden. Household deposits are approximately 19% in Sweden, and the bank's average forecast for year 2019 is 19.6%. The chart on funding composition indicates that, as well as client deposits, banks in Spain greatly rely on unsecured funding. This differs from Sweden, where covered bonds are a major source of funding for banks. Finally, funding mix dynamics combines in one view the relevance of deposits, issued debt securities, and the volume of bonds that banks want to issue in the course of the next 3 years. This chart indicates that client deposits are high and market funding is low in Spain, while the picture is the opposite for banks in Sweden. When you play the interactive tool, you can see that the trend remains the same over the forecast years, while the gross issuance volume, indicated by the size of the balloon, increases.
You can find the funding plan report on our website, along with the data tool. We hope you enjoy the report and have fun creating your own playlists of data from the tool.